All right, well, it has been a busy morning, and beyond the macro headlines we've been exploring, we're also watching some earnings coming out from a well-known Canadian retailer in Roots. Now, the company did lose money in the latest quarter, but it was a narrower loss, and there was revenue growth. The company has been going through a lot of changes over the last few years under Meghan Roach, the CEO of the company. She joins us here in studio to talk a little bit more about the business of Roots. Meghan, thanks very much for your time.
Thank you for having me.
Just in terms of the quarterly performance, how would you describe what's been happening with the business over the last few months?
We had really strong financial results this quarter. So our comp sales were up 14.1%, which was, off the basis of really strong DTC sales, which is our direct-to-consumer segment. And we saw double-digit comp sales growth in both our e-commerce and our stores business. We also saw really nice growth in gross margins. So overall, gross margins were up 250 basis points, and our direct-to-consumer segment alone was up 80 basis points. And then when you translate that to the bottom line, what you mentioned was, obviously, we narrowed losses. So we are a seasonal business. We do lose money in the first half of the year. But our adjusted EBITDA, excluding our DSU revaluations, was reduced by 16.8%. That was a 16.8% reduction in losses this quarter. So we feel very happy about how we're trending.
And we were just showing your stock performance over the last couple of years. So investors are paying attention to what's been happening more recently, but you said a few different things there. So if people are trying to understand the retail operations of Roots today versus, you've been in the CEO role for about 5.5 years now. You mentioned DTC, you mentioned e-commerce. How does the business break down versus stores versus that more direct-to-consumer channel now?
So direct-to-consumer for us is stores and e-commerce.
Because you have your own stores.
Because you have our own stores. So, if you look at our business today, we have two segments, direct-to-consumer, which is about 87% of our business, and then a separate section called Partners and Other. And that encompasses our business in China, business in Taiwan, also our business is with our licensed partners. So, overall, our direct-to-consumer business is the biggest, is the strongest, and the fastest growing right now.
And when it comes to what you're selling through those channels and getting it right, I feel like that's always part of the story as well, so that you not only have the right lineup, but that you're also ready for it on the inventory front. You seem to talk a lot about that. Can you walk us through what you're navigating there?
Absolutely. The most important thing is obviously driving the customers in stores, and then when they can come in stores or online is converting them. And so, this quarter we saw some really strong growth across some of those metrics, and it was driven by the fact that we had great product availability. When you came in the stores, it was easier to find. The store staff, the customer experience was obviously being improved, and a lot of this is due to a combination of things. So training, investments behind artificial intelligence on the inventory allocation side of things, improvements across our products over the last 4 to 5 years. So if you look at the business today, not only are most of our products made with sustainable materials, but we have updated cuts, more modern styles, fewer logos, and we have an activewear collection that continues to see double-digit growth each quarter. So there's a lot of things pushing the business forward.
Maybe you can shed a little bit more light on the AI part of the story. So how do you go about picking the right technology to implement, and what have you found to be the most? You alluded to it, but what are the ways by which AI can help your business?
So we focus on first and foremost identifying where we can drive the most value in our business, and then we look at what AI can help us to do to unlock that value. And so when you think about a business like Roots, obviously getting the right product to the consumers in the right places at the right time is incredibly important. So one of the first pieces we invested behind was inventory allocations. And so we have an AI-driven inventory allocation system right now. The second piece is obviously customer engagement. And so if you think about engaging with us on an online platform, a personalization of that experience, that's something that's really important to us. And so we also invested behind some technology that allows us to personalize our emails. When you come on our site and you search for something today, it's going to think about what your previous searches were and provide you with the right products. And so all of these things are thinking not necessarily just about what is AI and how can AI do something for us. It's more about what are we focusing on as a business, and then how can we use AI to unlock that benefit to us.
And would you say you're now seeing material benefits in the financial performance from some of those investments?
We're seeing material benefits in certain metrics that we're tracking around these specific areas. And so, obviously it is driving improvements in financial performance, and we anticipate it will continue to, but we think it's a combination of things improving our financial performance.
All right. Well, and obviously investors are watching the stock. Retail is always it's always changing. And so for, public companies that, can make an interesting ride for stocks. And Roots went public more than a few years ago. At this point, there was a lot of dialogue around what the Roots business as a public company would be. I think the other thing is that this is such a uniquely Canadian brand. I do wonder, in sort of a time of trade uncertainty, but perhaps patriotism, has that played a role in the business at all, would you say?
I would think if you look at our business over the last 3 quarters, so in Q3 we had a 5.8% increase in comps, in Q4 it was 7.5%, and then this quarter 14.1%. So what you can see is that we were seeing strong momentum coming into this Buy Canada movement, and so when we look at the business, we think that the Buy Canada movement obviously helps Canadian brands overall, but our momentum actually was driven pre that. And when we look at our business, we specifically actually carve out products that have Canada on them or that are made in Canada, and we can tell that they're not contributing as much to the overall growth as other things. So it's definitely helping us. We think the sentiment's great, and we think it will be beneficial as we look forward to the rest of the year in terms of travel during the summer periods, of people picking Canada over some other destinations.
But the just getting the fundamentals of the business right and technology in place for the future equally, if not more important. So speaking of the future, like if you were to give people a window into what you would like to accomplish, let's say over the next couple of years with the business of Roots, where would you like things to be?
I think longer-term international expansion continues to be a really key part of our strategy. We continue to believe there's lots of growth left in the Canadian marketplace. We think there's lots of growth left in our existing store base and our existing e-commerce platform. But we also see a big opportunity in international markets. So one of the things that I had done when I came in was relaunch our brand in China. And that's an area where we are seeing double-digit growth today. And so I see a lot of potential there. I also do see longer-term potential in the U.S. market once the current uncertainty settles down. So I think there's a lot of geographic expansion. Again, in our product categories, as I mentioned, things like activewear are growing really rapidly for us. And our core fleece collection, as we've expanded into different areas, is also seeing growth. So I think you can see expansion and performance improvements across product, channel, and geography for a brand like Roots.
Okay.